Welcome back, everybody. I know it's been a while since I've posted any videos. I had to get the members of the private group in the accelerator program off to a good start, and so that took some time and some focus in that regard. And so I'm back and want to continue the trainings and continue to provide the value that has been provided already, and continue on the same path and improve on that as well. And so today we're going to talk about, well, I hope you all had a good, the holidays were good, and you're ready for the new year, or already stepped into what is your purpose for the new year. And I hope we all have a good year as well, and even better year than last year too. And so yeah, hope everyone is good. Yeah, so we'll be speaking today about multi-time frame analysis, top-down analysis, same thing. Like, what's the purpose of it? How does it aid you in your trading? And like, what do you get from it? All right, so I'm gonna speak to you on GBP JPY. Just chose a random pair. Was nothing particular or special about it. And all right, so I'm on the monthly time frame. I won't tell you that I always start on the monthly time frame when I'm doing my top-down analysis, but just to give you a proper overview, this is where I'm going to start. All right, so what's the purpose of the higher time frames in your analysis? The purpose of the higher time frames in your analysis is to give you direction. So you want to know the direction in which you're going to take your trades before you actually look to take a trade. It makes sense to trade with the trend. You trade against the trend, you're going to be stopped out more often than you should be. I'm not saying there aren't counter trend trades, but it's best, as far as experience has taught, that you trade with the trend. And so it's important, if there's nothing else important that you need to establish before you look to trade, it is to establish your daily bias. Your daily bias comes from your directional bias. Your directional bias comes from your structural, the market structure according to the pair that you're looking at and the order flow of that pair. All right, so by just visuals from the visuals that we have here, by just looking at GBP JPY, we can see up, down, and we can see that we're heading back up just by looking at what we see in terms of structure. We have high, low, and we're going to make another high there. So if we were to mark out the structural points, the major swings, those would be them. So we can see that we swept liquidity here. This was the last point of the liquidity sweep, the drawn liquidity, and then the market rallied and broke structure here. So this is a good sign. This alone tells you that the market is now bullish. The break of structure of a major swing point, even though we didn't get highlighted before, this is a major swing point. Apologies. Right there. So this was another low. This was another low. That was a high. All right. Yeah, so with this, we know for sure that on the monthly time frame, GJ is bullish. Let's go to the weekly time frame to see what's happening, because not all the time will the time frames line up with each other. So sometimes you have to wait for the time frame that you're going to take the trade from to line up with the higher time frame structure, because the higher time frame structure is what you're trading along with. Okay, so we have the same thing. We have bullish structure, higher highs, higher lows, higher highs, higher lows, etc., going all the way up. This is a failed high at the moment, as far as I'm seeing, unless something changes here. But this candle has closed, and so the high here has not been broken. So we may be looking for some down movement here. And the truth is, we're seeing these relatively equal lows here, which is an area of resting liquidity. And so with this indication here, it can be reasonable to anticipate that price will come and take the liquidity that is resting here. So even though the monthly is bullish, we can expect some bearish movement for the short term. And if it is that you're going to be looking for trades now, you can possibly look for shorts. So let's go to the daily. All right, so we see it even more clearly here. We can definitely see the high that failed. This failed to create a higher high. So as I said, good signal to tell you you can start to look for shorts. In the short term though, where would you be looking to take a trade if that's the case? So we have now established that short term we're looking for sells. Once I believe, in my estimation, that once this liquidity is swept, we possibly can start to see more bullish momentum. But for now, if we're going to look for a trade for this week, we're looking for sells. Possible point of interest. You're looking for fresh zones that have not yet been mitigated, and zones strong enough to push price back up. I am seeing this breaker block here. Remember, we did a video already on breaker blocks explaining what they are, how to identify them, and how they are mitigated. So we saw this bearish order block. Price went down, but when price came back up, it didn't react to this block at all. It violated the block. So whenever price returns to it, we expect the price to continue in the bullish direction. So this would be a point of interest already. We might see small reactions from these blocks along the way, but in my anticipation, I'm anticipating that price will come back to the breaker block here. And but if you're going to look to sell, because that's what we're looking at, what would be a point of interest there? So you'd now know your take profit target from this, and you could actually get a buy now from this, because remember that originally the price was bullish on the long-term perspective. So price has dipped below these lows here. Let me change that. Price has dropped below these lows. So that's a break of structure. Even though it didn't close below, I'd be wary just the same, because I'd want to see price close below these. See a candle close below this low to say that, to confirm for sure that yes, the low is broken, not a wick. So I'm looking for one more candle to close below this line to say yes, we're now going down, and it's not going to turn and go back up. All right, so this is a point to watch to see what will happen as of today into tomorrow. But if price closes below this low here, this order block would be a point of interest, unless it is that, so let's highlight that for now, but unless it is that, all right, so say price comes all the way down with bearish candles straight through, and unless it is that it creates a breaker block somewhere in here again, that would now then trump this as the point of interest, and you'd be looking at the breaker block instead. But for now, if price comes down with another bearish candle closes below this low, we look for a pullback into this bearish order block and get a sell into this point of interest here. I don't anticipate that price would break this low yet until it reacts to this breaker block, comes back up. You have to wait, but for an immediate sell in terms of what we're looking for a trade immediately, the most immediate trade would come between these 2 points here. So if price continues, closes below here, we look for pullback into this order block, a sell if there's no breaker block created here. Price comes down, it will react to this breaker block here. You look for a short-term buy as well, because as I said, there's resting liquidity just below here. So it is reasonable to anticipate that price may break these lows and possibly even sweep, not even as far as there, but sweep into this wick here. May not go as far because, as I said, the monthly time frame is bullish, so may not break that low. May break even just to here, into that wick. It's a possibility. Right, and take out these lows. So and then and then rally back up. So trading, as we know, is a game of probabilities. The idea is that you build a story around your trade. You look for confluences to help the story that you're building in terms of what you're seeing. So, for example, as I said, in terms of confluences, we're looking to see, if we're going to sell, we're looking to see a candle close below these lows. Good confluence that price is going to go down. If it doesn't, the confluence would support that the price is going to continue up. And then you would no longer be looking for sells into this point here. But as long as the candle closes below here, you can look for a pullback, a sell. If there's no pullback, say price runs straight into this, you know you didn't get a sell, so what you're now looking for is a buy from this area. Then you would have to look at what structure did in terms of what the price movement did to know where your take profit target would be based on that. So you watch what happened in terms of if price came straight down, if it left imbalances, there's a possibility that price would react to the imbalance that it left as well. So you have to add the confluences to build a story to confirm what you're doing, to make sure that you're taking the trade in the right direction and at the right points of interest. All right, so this is just a daily. We did a lot here just now. But say, for example, we are getting into a sell here. What you'd be looking to do then is to refine this point of interest. So let's fall to the 1 hour time frame. Maybe not so far yet. Let's go to the 4 hour. All right, so and you see it's a different story down here. All right, so we're seeing more clearly now what took place. So price has broken below the low. And if you notice, we didn't see it as clearly further up, which is why it's good to comb through all the time frames, possibly down to the 1 hour, to see what exactly is happening. All right, so price has broken this low. But what will happen then from this breakdown of price is that we aren't going to expect price to come back up here, because this is the order block that caused the push, that caused the break of structure all the way across here. And so, but this was the lowest point, which is why I started here. So price has closed below the low. The pullback I was referring to has happened already. We can start to see the rejection in the candle here. You could look for a sell in this area, but you'd have to fall to a lower time frame. So let's mark out this order block here. I'm really breaking it down for you guys so you understand how you would actually use the multi-time frame analysis to verify your trade. Okay, the price has mitigated about 50%, just above, of the order block here. Let's go to the 1 hour time frame. What the point is, you're trying to stay inside the original box, which is this one for the order block that we highlighted on the 4 hour, and there we can see clearly the rejection candle. So we're looking for sells into the POI that we had down here, right here. All right, so how do we Because today is Sunday, with markets open soon. What do we do to make sure we get a proper entry in here? All right, so we see a breaker block has been formed, but I don't think price reacted to this because it was working from the higher time frame POI, which is why it reacted to this block here, which was this when you refine it. Right there. Almost a perfect touch. When you drop to a lower time frame, we're gonna use a different color to just highlight this candle here, just this candle, and I'm going to show you how it breaks down and how you can take that as a way to get into a trade. Let me change the color to probably green, nope, red maybe, yeah. All right, 15 minutes. All right, so you see how that one candle breaks out. So what you do now is you, whatever confirmations you'd be using, you're looking to get your entry from here. We can see the reversal pattern with the bullish, the doji, and the bearish candle coming down. So once price returns to this area on this time frame, you can get into the sell. And that's the whole idea here. So you would not have missed the trade, which is why we don't chase price. You would have missed the trade even though the candle has tapped into the area already. You would just simply break down to a lower time frame to see what is happening better. And from that, you wait for price to come back to you and you get your entry. So you wait for price to come back to this area here and sell off into the other areas that we had spoken about further down. Let's see what else. And we can see the bearish structure already being formed on the 15-minute time frame. The lower lows and the lower highs, good point as well to note. And that's how you know you're actually going to be trading in the right direction for now. Remember this block here. Let's see what the pip count would be if we were to take this trade tomorrow or today. That's 33 pips. Hold on. It doesn't matter if it's 10 pips. It's the risk to reward ratio that you want to be sure of. So it's 35 pips or 354 pips. 354 pips, sorry. And I'm thinking about MT4 that gives you where you have to read it a little bit different. All right, so yes, 354 pips. So if we were to drop so even if we were, say we're going to take the trade from this time frame, the 15-minute time frame, and we were to use, this would be, right. So we're using this bearish bullish candle here as the POI, just for argument's sake. Because we haven't seen price action play out yet to know exactly which POI we would use yet. So I'm just using this as a way to tell the story. All right, so we would enter at the close of the candle, the start of the candle, the open of the candle, because it's a bullish candle. And the stop loss would be at the close of the candle. That's up at top. Let's adjust this a little. Right. All right, so you have an 8. I just running. All right, so you have about an 8 pip stop loss there. And let's go back to the 1 hour to look for a target. Because you take your targets from the higher time frame, because you'll see structure better from there. All right, so you eliminate the noise. All right, so your first point of interest, not point of interest, your first take profit would be this low here, because you follow structure to give you your take profits where the swings are or where you see strong POIs such as imbalances or breaker blocks or other order blocks from higher time frames, and you use those as your targets for your take profit, because you never know if price will actually reverse from those points of interest. So you take partials along the way. As long as the price keeps going in the direction that you want it to go, then you just leave parts of the trade on to continue to run, so that you are staying in the trade to collect the rest of the profits. But let's assume that price goes in where we think it will go, which is here. This is you're looking at a 47-to-1 risk to reward ratio, and we haven't even reduced the POI further into the 1 minute or the 5-minute time frame. We were simply taking the trade from the 15-minute time frame. Probably would have been looking at double that from a lower time frame. But sometimes it doesn't always make sense to refine so much, because you might miss the trade too, because you over refine. And so it's best to, wherever you see the POI the clearest, to take the trade from that point of interest. And that you're still going to be in the trade, you're still going to be profitable, you're still going to make profits from the trade. That is the whole point of the whole game. And so sometimes you don't want to refine yourself out of the trade. And that's how you would basically drill down to. So to recap, let me put it that way. You take your direction from the weekly, daily, monthly, even down to the 4-hour. But as you can see, once you start to go down to the lower time frames, you'll start to see the price action even more clearly, and it will help you to build confluence as to what price is doing, where you want to take your entry from, and where you want to take your profits. Your profits would come from the swings within the price. So first take profit, second, third, fourth, fifth, final. That's the idea of your the whole scenario of looking to take a trade. And you trade you trade with the current direction of price, and that way you can't go wrong. So even though we had a overall bullish perspective on GJ right now, because overall it's bullish, long term is bullish, but for now, if we were going to look to take a trade today into tomorrow into this week, we are looking to take shorts because price is reversing slightly. So based on areas of price that you want to go back to, probably to get discounted prices in order to buy. And so that's just how it works. Just follow the institutional footprints and you can't go wrong. I hope this video was helpful today. The next video I'll come with is regarding identifying pools of liquidity and how you can use those as confluence to take your trades and to have successful trades. All right, guys, have a great day. Thanks for watching. Bye-bye.